This is what $100,000 in silver looks like. I was going to put these big COMEX bars on their side, but it didn't show the sheer size of them, so I decided to recreate Stonehenge over here, and you can barely even fit me in the frame. So if you were curious of what $100,000 worth of silver looks like, it's quite a bit. It's quite a bit, and you're not going to be able to throw this in a backpack and go anywhere with $100,000 worth of silver. I wanted to make this video to talk about why I actually choose silver over gold. Gold has been in the front page news lately about how it's been going up. When the stock market's been going down, gold has started to go up. Silver's trailing behind it, but it's trailing quite a bit far behind it, too far in my personal opinion. I'm going to go over some really good information in this video with some charts over here on the left talking about the silver to gold ratio and just showing some studies about the last time we went through an inflationary cycle and what it did for the price of gold and silver at that time. So some really good information on that. If you're curious what all of these bars look like, these are actually old New York assay office bars from 1951, if you can believe it. Super cool bars with a lot of history, and I have a lot of pictures and videos and stuff on my Instagram. If you want to check out what these bars actually look like, just go to my Instagram, @RobSoltan. Again, @RobSoltan on Instagram. So let's go over some points in this video. This is obviously some clickbait here. As usual, we got some clickbait. If you could click the subscribe for not waiting till the end of the video or slow rolling the silver into the frame, would really appreciate it. Hopefully this information is really worth your time and you want to click the subscribe because of that, but would really appreciate it if you do click that. So let me go over to my screen over here because it's not all about clickbait. It is about some real information. So here is the silver to gold ratio. And what's very interesting to me is the last time we saw an all-time high in silver, it was in 2011, which was around here, right? So in 2011, you saw the silver to gold ratio between 30 and 40 on the silver to gold ratio. So the lowest it was in April of 2011. This is at silver's all-time high, and it went to a 31.6 silver to gold ratio, which basically means it took 31.6 ounces of silver to buy an ounce of gold. So that's what the silver to gold ratio means. Now you can tell that it's back up way too high at around 80 on the silver to gold ratio, which in my opinion, I think we're going to see a chart very similar to what we saw from 2008 when we saw this $80 ratio back in 2008 going down to a 30 ratio. And if we had, and I have some other stuff I want to show you in regards to the price of silver at this time and the price of gold at this time and relevant to today's price of gold and silver, but I am making a thesis, not financial advice, just my personal opinion. I think we're going to get back to around a 30 to 40 silver to gold ratio, which means if we had a 31 silver to gold ratio right now, that would be about a $60 an ounce silver price, which, as you can tell, would be a lot of gains there for silver. I think silver could easily double, and I think it should be around that $60 price, because if it was at the 30 to 1 ratio, again, we'd be around 60 to 70 an ounce price for silver. I'm going to show you why I believe silver is so falsely suppressed right now as well by going over to this chart. So the first thing I wanted to show people, because last time I talked about this, they reminded me that the Hunt brothers had cornered the silver market, and that's what made it spike. But what's interesting is at the same time that the Hunt brothers cornered the silver market, they didn't corner the gold market, they cornered the silver market. This is when we had serious inflation problems. So you can see that from 1979 to 1981, which was the last time we went through a very serious inflation. Let me show you that really quick here. For the inflation, rather. Sorry about that. So from 1978, you had a 9% annual inflation. Then you had a 13.29% annual, and actually went a lot higher than that when you go by the months. But this is doing the yearly projection. So this is the last time we saw a serious inflation similar to what we're seeing now. Now, if we did the same CPI data that we did back then in 1979, it would show that the inflation rate is right up there, maybe even higher than it was back then. But this is the last time we went through inflation. So I like to study the last time that we actually had a stagflation, inflation type environment here. So let me go back here. So again, this is 1979, as you can see. the price of gold, I'm studying the price of gold here first because that shows that it wasn't just about the Hunt brothers because gold wasn't affected by them. But we go 1978, the price of gold was just shy of $200 per ounce. When we go through the stagflation, you had Paul Volcker raise rates to 20%. There was a serious inflation problem, and it peaked out up here around in the 700s per ounce on gold. It actually spiked up to nearly 900 an ounce in 1980. So huge gain in gold, and that's why we're starting to see gold break out here as well, because gold actually does very well in an inflation environment. Same thing with silver. So let's pull up the silver chart because that's what I'm trying to talk about in this video. But let me pull up the all-time here. And I want to show that exact time period. So we had high inflation, and silver price from 1978 was around $4 or $5 an ounce and skyrocketed all the way up to just under $50 an ounce. Now, the Hunt brothers did have a lot to do with cornering this market, but just like I showed you, they didn't affect the gold market, and gold had a huge gain at this time as well, which tells me that silver is a performer during inflation, just like gold was. Now, the next thing I wanted to show you, and that's like that's the only real comparison I can make because we haven't had inflation like this since the 1979 to 1981-82 period there. Because actually in 2008, surprisingly enough, let me move me on the screen here. So this is the inflation. In 2008, inflation was actually really, really low. So that's why I believe this time around it's a lot different than 2008, because in 2008, the precious metals crashed with the overall market. But right now, we're seeing the NASDAQ, we're seeing the entire broad stock market crashing, S&P 500 crashing, and we're seeing gold go up. So last time this happened, last recession, we had a low inflation. This time we have a very high inflation. So that tells me that when the money is getting sold out of equities, it is flooding into gold and silver right now, and it's going to risk off assets in a different way than we saw in 2008, 2009, because the inflation, again, is way higher than it was back then. And that goes under that hot potato theory I've been talking about, with the dollar index remaining strong because people are holding on to their dollars, waiting for something to throw it at. So let me put myself down there. The next thing I wanted to show you in this video, if we pull out gold's all-time chart, or we go through the last year of gold, or excuse me, the all-time chart, but zoom in a bit. The last time, we're now getting back to that all-time high that it had. Well, it got an all-time high actually in August of 2020. It got to just under 2,100 an ounce on gold. But in 2011, this is when silver had its all-time high. And this is why I argue that I think silver should be, right now, it should be $50 an ounce, if not higher. Because here, look at this. In 2011, and this isn't affected by the Hunt brothers. This is just, 10 years ago. 10 years ago, you had a price on gold just over 1,900 an ounce, exactly where it is today. But here's the crazy part. So gold is exactly where it was in the highs of 2011, right? This is after we had the recession and all of that money that was in dollars got flooded into the risk-off precious metals, and we saw gold get up to that price. Now it's right back at the same price that it was in 2011. But here's what's crazy. We pull up the same chart. Silver at that time in 2011 was $50 an ounce. But why does that not go perfectly straight across like we see in gold? We see it right here. We see it go perfectly straight across. It's back up at the same high that it was in 2011, but silver just remains ridiculously low. What's going on here? What's holding silver down at this level? It should be exactly where it was in 2011 at a minimum. At a minimum. So this is just some of the technical analysis stuff that I like to look into, and it doesn't make sense to see silver so low. I think silver could easily double. You have a monetary metal that is also being used in industry much more so than gold is, and it's being falsely suppressed, in my personal opinion. Again, all my videos are my personal opinion, not financial advice, so disclaimer. But personally, I think silver is ridiculously undervalued, and that's what I wanted to make this video about, to show that comparison. And then we also can pull back the chart, and it's just crazy to see that silver had that peak in the 70s. But the main thing, I know some people tell me that the Hunt brothers, they had something to do with cornering the market, but the thing is, the Hunt brothers wasn't around in 2011. and we have not seen the same return to the all-time highs like we've seen in gold. And I am so astonished as to why. It doesn't make sense to me because gold is back to all-time highs and getting back towards the all-time high that was made in August of 2020. So as gold continues to go up, I think silver has the more potential of the two. I tend to want to be in the metals that are being used more in industry, and silver is used in a ridiculous amount of electrical components, used in solar panels, all kinds of things that silver is used in, yet it remains so ridiculously low on the price. It's just a matter of time. The next thing I would want to talk about is from a macro view. We're seeing gold being in front page news as the risk-off asset. Money is flooding into gold from the stock market being sold off like we've never seen before. We didn't see it like this in 2008. Actually, it was falling with the broad market. So to see that detachment is very interesting. But then at the same time, to see that silver hasn't recovered in the same way that gold has to all-time highs, that's very strange. There's something missing there. And that's where I see opportunity in silver. $100,000 in silver shouldn't be me recreating the Stonehenge on my table here. It's ridiculous how much silver you get for $100,000. If you showed people, back in the day how much silver you get in comparison to gold, that you like the silver to gold ratio, it'd be crazy. They wouldn't believe you. So to me, I think that it's almost as if I'm stealing it. It's so low in price compared to where it should be. I think silver should double at a minimum. So that is my projection on silver and what I think about it. Again, not financial advice, but the last thing I would say is what's interesting about silver is it's being eaten up by industry, much more so on a percentage basis than gold, but also it has a much smaller market cap. So gold's market cap is roughly 12 trillion on the market cap. Silver's market cap is just over 1 trillion. It's between 1.2 and 1.4 trillion on the market cap of silver. So it's a lot easier to move a needle that's a little bit over $1 trillion than it is to move a $12 trillion needle, but yet we're seeing that $12 trillion needle move. Very strange, because I think that silver could easily double, and it's not only could it easily double, but it's easier to make silver double, if that makes sense. From a macro standpoint, it's a lot easier to push a $1 trillion market than to push a $12 trillion market. And as that $12 trillion market continues to push, I think more and more people are going to open their eyes to just how undervalued silver is and industrial precious metals as a whole. A lot of people are talking about gold right now. They're not talking about how palladium just jumped roughly 20% in the last 2 months. Platinum jumped roughly 20% in the last 2 months. Palladium jumped roughly 50% in the last 2 months, but nobody's talking about palladium and platinum, and they're not talking about silver either. I think silver is the most suppressed and has the most upside right now of any precious metal, in my personal opinion, but I also am very bullish on platinum and palladium as well, and gold I am bullish on, just not as bullish as the industrial precious metals. So this video was all to talk about silver and to show off this crazy amount of silver bars here. Hopefully you didn't think it was clickbait and you can actually see. Maybe I'll rotate these around. Again, you can see these bars on my Instagram. If you want to see close-ups of them, just go to @Rob Soltan on Instagram if you want to follow me over there. But honestly, these bars are crazy looking. Super old school from the 1950s. Let's see if I could spin them around a little bit. They're on the felt, so I can actually move them a little bit just to show you how crazy the pores look on these things. But I figured I wanted to put them on their side, but it really shows how much volume they really have when you put them on when you face them up like that, like we're recreating Stonehenge. Maybe we'll put some of these across here, recreate Stonehenge a little bit. I'm just kidding. But thank you so much for watching. If you found this video helpful, please do click the subscribe. Please hit the like button, because when you hit the like button, it really does help for the YouTube algorithm. And again, if you would be so kind to follow on Instagram, you would see all the photos of these bars if you want to see close-ups of them and the other stuff that I collect. Thank you so much for watching, and I will see you at the next video. Signing out.